All right, taking stock of shipping, Aegean Marine Petroleum Network, it supplies ships with fuel. That's basic. And after the bell, the company issued third quarter earnings, 33 cents a share, up from 22 cents a year ago, and also beating analyst estimates by 3 cents. Revenue, though, down 20% to about $740 million. Joining us now, Nikolas Tavlarios. He is the president of Aegean Marine Petroleum Network. Good to have you with us. Thanks for coming in. Appreciate it, especially on a day when you're doing the earnings. Talk to me about what's going on in the fueling business, because there are some issues that people that are not intimately involved with the business might not know about, and a lot of it has to do with this idea of low sulfur fuel and some mandates. A lot of ships, that's what they're going to be burning.
Oh, yeah, there's definitely a fight against greenhouse gases. Everyone knows about this around the world. And there's a move away from a higher sulfur fuel, which is more contaminative, to lower sulfur fuel. Lower sulfur fuel is less available, costs more, and it requires different infrastructure to deliver. It's something that Aegean Marine Petroleum Network has in its fleet of vessels.
Right, because it's not something that you can just pull up to the filling station and fuel your ship with this stuff.
Right, because you'll have to be able to sell high sulfur fuel, low sulfur fuel, low sulfur diesels, and various product lines. So you need ships with segregated tanks that can carry multiple grades of cargo. Otherwise, the ships are commercially obsolete.
So we've got a certain asset group that you've got in terms of these ships. How many ships now? You're on the way to 55?
Yeah, we have 39 now, and we'll be at 54, 55 ships around the same time next year.
And the idea is they've got these segregated compartments which will allow them to supply the ships with all the various fuel needs.
That's right. We'll be able to serve our customers with all their fuel needs.
Talk about what's going on out of Gibraltar right now, because, in fact, one of the notes from BB&T Capital noting that Gibraltar is seeing a pickup in the number of ships coming into port, and that's boding well for your business.
Oh, sure.
That's your number 2 place, right? After Singapore.
It's actually our number 3 market. And we have a significant stake in that market. Gibraltar has traditionally been a strong port, but oddly, they've been seeing more traffic there. And it seems that the strong ports have stayed strong during this time where people think that actually sales are down, but they're not. They've gone the other way. And what's happened is a company that is well capitalized has been able to capture market share. So you've watched, again, us with a strong balance sheet be able to pick up more and more business during a difficult time.
All right, so you've got operations, big operations in Gibraltar. You've got the Singapore operations as well. Where else should we be looking for Aegean?
United Arab Emirates.
Right.
And we have 2 new locations. We have a location in Trinidad that we just launched, which is doing very well.
And in fact, you're getting a new ship that was just taken, you took delivery on, and that's going down there.
That's correct. That's right. Yeah, the new ship is going down to Trinidad. We just deployed a new vessel to West Africa, which we think is going to be an exciting spot.
What's hot about West Africa? We know about Nigeria and Angola, but I mean,
we're actually in Ghana.
Okay.
And Ghana is one of the locations where they found oil recently, and they're talking about exporting oil starting late 2010, and we just happen to be right there. So we have a good setup in Ghana as well.
What is the best way for an investor to measure, let's say, the ongoing business health of Aegean? I mean, I noted in a lot of the reports, it's always, looking at tons that are supplied on, what, a weekly basis to each of the vessels? What is the best metric here?
We basically comes down to utilization, but that starts with volume. So you watch our volume sales, you'll know our fleet count, and then the metric really comes to tons per vessel per day, which is our utilization metric. And then after that, to calculate your revenue, you'll know what the gross spread is, which is our own coined phrase, which is what your gross profit margin is on sales.
Right, because I mean, you're going to pay for the fuel and then what it is you charge the customers for. Can you give us some idea? I mean, because we always look at the Baltic Dry Index when we take a look at the dry bulk industry. Can you give us some idea of the tons per day per vessel? I mean, what those numbers have been and what kind of trajectory we're on?
Right. We have, since we were private and went public, we've watched our utilization go from roughly 400 tons per vessel per day to around 600 tons per vessel per day. We think the functional maximum on a global basis is around 800 tons per vessel per day. So we're probably the 65, 70% range right now. There's still more that we can do with these ships as we mature.
Last question for you is this whole idea of single hull versus double hull, because we know single hull is going into the history books. It's not going to be around very much anymore. Is that going to have an effect on fueling requirements?
Oh, well, not on the fueling requirement itself, but on how the delivery is done, yeah. Our same-store sales are up 35% in markets. So there's definitely been an impact from the phase out of the single hull ships, and that trend continues through 2015.
All right. I want to thank you very much, Nikolas Tavlarios, coming in and sharing sharing your thoughts about Aegean Marine Petroleum Network, telling us about how you actually refuel. Bunker fuel, by the way, that's kind of going the way, isn't it?
Yeah, and it's going to move more towards that cleaner fuel that we talked about, the low sulfur fuel.
I want to thank you very much.